trading day. Then the index seesawed at the milestone, only to fall in the afternoon and close down 7. No big deal, says the chairman of the stock exchange.
Well, I don't think it has much impact in the longer term on where investor sentiments lie.
The Dow Industrial Average has surged 30% this year, powered by big gains in household names like Philip Morris, Coca-Cola, and Boeing. Behind the gains has been a near-perfect setting of strong corporate profits, low inflation, and a rallying bond market, which has pushed interest rates down. Strategist Stephen Einhorn predicts more of the same ahead.
It is not too late to be in the market. The bull has a lot of time and price left in it.
But technical analysts who chart every zig and zag of the Dow are worried. While the Dow climbed 3.5% in the last 2 weeks, broader indices are not keeping up. The Standard & Poor's 500 was up only 1.5%. The Nasdaq Composite fell 2%, and the Russell Index of 2,000 stocks was virtually unchanged. It's what technicians call a short-term divergence.
The character and feature of a dynamic bull market is not selectivity, but all-inclusive homogeneous performance. We're not seeing that now.
Even so, Shobin is bullish for the long term. Before the end of a bull market, interest rates and inflation almost always rise, and the Federal Reserve tightens monetary policy. None of that is happening, so many market pros predict the Dow will break 6,000, if not next year, then the year after. Alan Chernoff, CNBC Business News, New York. 30, 40, even 50% off. Retailers already are offering deep discounts to lure shoppers because heading into the holiday season, Americans have been keeping a tight grip on their wallets.
They're definitely looking for a value, and they're certainly more careful when they're spending their dollar.
Some big chains have fallen into bankruptcy in recent months, including Caldor, Bradley's, and Jamesway. This at a time when the economy is growing rapidly. So why are consumers cautious? Many say it's because corporate America keeps laying off.
What the downsizing mentality and mindset is doing to people is giving them a great sense of uncertainty about their own future.
3M is cutting 5,000. AT&T is offering buyouts to 77,000 managers.
I think overall, everybody in the United States should be a little concerned. A lot of companies are downsizing.
In recent weeks, Kellogg, Texaco, and Allied Signal have joined the ever-expanding list. And governments trying to balance budgets keep trimming staff. Richard Hill used to work for New York City.
As far as spending is concerned, it's going to be minimum, very minimum, because I can't afford it.
The opportunity to cut costs through layoffs is helping fuel a record number of mergers this year, including the combination of Chase Manhattan and Chemical Bank. So far this year, corporate America has announced layoffs of more than 350,000 workers. That's actually a slower pace than last year or the year before, when well over 500,000 were pushed out of work. But the fact that cutbacks continue while the economy is doing well is creating a psychological chill, says union consultant Les Leopold.
The level of job insecurity, in my experience, working with working people for the past 20 years, has never been higher.
And those with jobs are getting small raises. Real wages are up only 1% this year. None of this means the holiday shopping season will be a bust this year, but with consumers cautious, retail profit margins could be slim. Alan Chernoff, CNBC Business News, New York.